Good morning, investors. You are now on KleverStock with me, Ainunjaria, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. Bursa Malaysia opened higher on Thursday, lifted by regional gains and cautious sentiment after Wall Street ended mixed overnight, with the Nasdaq and S&P 500 advancing while the Dow edged lower. At 9:10 a.m., the FPM KLCI rose 4.72 points to 1,616.27 from Wednesday's close of 1,611.55, after opening 0.16 of a point lower at 1,611.39. The market breadth was positive, with gainers leading losers 232 to 154, while 316 counters were unchanged, 1,970 untraded, and 18 suspended. Turnover stood at 249.51 million shares worth 133.94 million ringgit. Rakuten Trades India Berhad Vice President of Equity Research Stong Pat Leng said Wall Street ended mixed in a volatile session, buoyed by strong earnings from Bank of America and Morgan Stanley, which lifted expectations for a better-than-expected earnings season. He told Bernama, meanwhile, the U.S. 10-year Treasury yield remained flat at 4.03%. On the domestic front, Thong noted that the FPM KLCI closed flat amid continued foreign selling but improving daily volumes, indicated stronger retail participation. He expects the benchmark index to hover within the 1,610 to 1,620 range today. Among heavyweights, Maybank added 5 cents to 9 ringgit and 97 cents. Tenaga Nasional rose 6 cents to 13 ringgit and 24 cents, while Public Bank and CIMB Group gained 2 cents to 4 ringgit and 22 cents and 7 ringgit and 36 cents respectively. IHH Healthcare was unchanged at 8 ringgit and 7 cents. In active trading, Sedania Innovator advanced 3 cents to 29 cents. ECA Integrated climbed 1.5 cents to 26 cents, and Pegasus Heights gained half a cent to 1 cent. Dagang Exchange fell half a cent to 28.5 cents, while TWL remained at 2 cents. Top gainers included United Malacca, which rose 20 cents to 5 ringgit and 90 cents, Hong Leong Bank up 10 cents to 20 ringgit and 74 cents, and Genting, which added 8 cents to 3 ringgit and 48 cents. Southern Cable and Keen Hin gained 5 cents each to 2 ringgit and 23 cents and 1 ringgit and 43 cents. Among the top losers, Malaysian Pacific Industries and Hong Leong Industries fell 8 cents each to 28 ringgit and 76 cents and 13 ringgit and 56 cents. Holdings slipped 5.5 cents to 74.5 cents. Roan Ma Holdings declined 5 cents to 66 cents, while Hong Leong Financial eased 4 cents to 16 ringgit and 96 cents. Moving on to local currency updates. The ringgit started the day stronger against US dollar, buoyed by improved domestic market sentiment amid ongoing global developments. At 8 a.m., the local note stood at 4.2220 or 4.2430 versus the greenback, strengthening from yesterday's close of 4.2305 or 4.2355. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzanizam Abdul Rashid noted that renewed trade tensions between the United States and China had led to a weaker US dollar. He said the US dollar index DXY declined by 0.26% to 98.793 points as the escalating trade conflict is expected to reinforce the case for a potential interest rate cut by the US Federal Reserve. In light of this, the ringgit is likely to remain resilient, with the USD MYR exchange rate expected to hover between 4 ringgit and 22 cents and 4 ringgit and 23 cents. The ringgit, however, traded mostly lower against a basket of major currencies. except for the euro, which appreciated to 4.9165 or 4.9410. It softened against the British pound to 5.6579 or 5.6860 and declined vis-a-vis the Japanese yen to 2.7957 to 8097. In contrast, the ringgit trended higher against ASEAN currencies. The local note improved against the Thai baht to 12.9708 or 13.0425, rose against Singapore dollar to 3.2585 or 3.2749, gained against the Indonesian rupiah to 254.7 or 256.0 and appreciated against the Philippine peso to 7.27 or 7.31. Continuing with some local economic updates. Fitch Ratings expects Malaysia's economy to grow 4% for 2026. The firm said the federal government's fiscal deficit target of 3.5% of gross domestic product GDP in 2026 is marginally lower than its projection of 3.6%. It said this largely reflects the government's relatively upbeat projection that the economy will grow by 4.0% to 4.5% in 2026. Fitch expects growth to be at the bottom of this range at 4%. The firm said the government has sustained its focus on fiscal consolidation despite revenue headwinds from falling global oil prices. The government projects Malaysia fiscal revenue over GDP ratio will dip again in 2026 to 16.1% from 17.3% in 2023. This trend is largely driven by weaker non-tax revenues, notably lower dividends from Petroleum Nasional Berhad. It added, pressure on non-tax revenue will put increasing tax revenue and expenditure rationalization at the core of efforts to control the deficit. The authorities expect only a slight increase in tax revenue over GDP in 2026 to 12.7% of GDP from 12.6% in 2025, despite higher duties on cigarettes and alcohol and plans for a new carbon tax, as well as the full-year effects of e-invoicing and expanded sales and service tax that were implemented in 2025. Instead, consolidation will mostly be driven by controlling operating expenditure, which is set to fall to 15.9% of the GDP in 2026 from 16.5% in 2025. The firm also noted that the government has demonstrated its commitment to these goals via subsidy reduction, where it ended a blanket subsidy for eggs in August 2025 and reformed the diesel and petrol subsidy regimes to produce savings. Such moves are not popular, even though the authorities have channeled a substantial share of the savings into social welfare. However, they believe the slow and gradual pace of subsidy reduction should limit the risk of popular discontent, impeding to government's ability to implement its plans. Losers' control over spending would make reaching the budget's fiscal targets challenging. Fitch estimates Malaysia's general government debt was at 76.5% of GDP at end June 2025, including committed guarantees amounting to 11.8% of GDP and 55.8% of total outstanding financial guarantees. It said, when we affirmed Malaysia's rating at BBB+ with stable outlook in December 2024, we indicated that a downward trend in general government debt to GDP, bringing it closer to peer median, supported by a strong consolidation strategy and/or improved growth prospects, could put an upward pressure on the rating. Moving on to corporate news update. New measures are being introduced to accelerate investments under the Johor Singapore Special Economic Zone (JSSEZ), which has already attracted more than 19.2 billion ringgit in commitments from Singapore-based firms since its launch in January. Johor Menteri Besar Dato' Onn Hafiz Ghazi, who attended the second JSSEZ Joint Investment Forum at Marina Bay Sands here yesterday, said the state government remains committed to facilitating investors through the Invest Malaysia Facilitation Centre Johor (IMFCJ) and strengthening the local talent pool via the Johor Talent Development Centre (JTDC). He said the new measures would further enhance Johor's role as a regional growth hub by ensuring faster licensing approvals and stronger support for small and medium enterprises (SMEs). He said Johor is fully aligned with federal initiatives to make the JSSEZ an investor-friendly and sustainable growth zone. The IMFCJ's one-stop approach and targeted talent development through JTDC will ensure local industries and SMEs share in the economic spillover. Also present was Singapore's Deputy Prime Minister and Minister for Trade and Industry Gan Kim Yong, and Investment, Trade and Industry Minister Tengku Datuk Seri Utama Zafrul Tengku Abdul Aziz. Now, Zafrul said manufacturing licenses for non-sensitive industries within the zone will now be approved within 7 working days, while the Johor government will issue the required no objection letter within the same time frame, a move expected to significantly reduce bureaucratic delays. He added that under Budget 2026, an additional 200 million ringgit has been allocated to the Strategic Co-Investment Fund to enable SMEs to co-invest in high-impact JSSEZ projects, particularly in the green economy, advanced manufacturing and digital sectors. Now, meanwhile, 650 million ringgit will be channeled through the Skills Development Fund Corporation to upskill 25,000 trainees in emerging industries such as artificial intelligence, semiconductors and electric vehicles, areas critical to the JSSEZ's industrial ecosystem. The forum, attended by more than 900 business leaders, investors and policymakers from both industries, also featured strategic discussions on supply chain resilience, green industry transformation and high-value opportunities in manufacturing, logistics and advanced services. Onn Hafiz also witnessed the signing of a Memorandum of Understanding between Southern Catalyst, Artisan and CGS International Securities Malaysia to strengthen Johor's role in developing a modern agropolis and promoting smart agriculture and green economy ventures. Launched in January 2025, the JSSEZ is a landmark bilateral initiative between Malaysia and Singapore designed to boost cross-border trade, investment and talent mobility. It complements the Forest City's special financial zone, with Johor positioned as the key driver of this regional economic corridor. Onn Hafiz said Johor welcomes investors to see for themselves in the opportunities here. Every investment brings us closer to building an inclusive and prosperous state. The JSSEZ Johor Singapore Special Economic Zone, Dato' Onn Hafiz Ghazi, Gan Kim Yong, Forest City Malaysia Singapore ties green economy regional growth hub. And finally, wrapping up, we have major corporate developments and deals across Malaysia. First off, we have Genting Malaysia's indirect wholly owned subsidiary, Genting New York LLC, GENI, has submitted supplemental application materials to the New York Gaming Facility Location Board, NYGFB, for the final evaluation of its bid for a downstate New York commercial casino license. Bloomberg also reported that Genting remains in the running for a downstate New York casino license following MGM Resorts International's withdrawal. The Rock contenders are Hard Rock International, partnering with Mets owner Steve Cohen and Bally's Corp, all vying for one of the limited full-scale commercial licenses expected to be awarded on December 1st, 2025. Crest Builder has received 2 letters of awards from Quantum Quest Sdn Bhd for the development of service apartments in Kuala Lumpur worth 23.93 million ringgit. Coastal Contract subsidiary Elite Point PT Ltd has secured a new lifeboat charter contract worth 12.8 million ringgit following the expiry of the original contract. Now that's a wrap on Moneybell Updates with me, Anujarya, on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.